Live at TFNN, the Power Trading Hour with your host, David White. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, David White.
And welcome to another exciting edition of the Power Trading Hour with me, your humble, lovable, squeezably soft host. And now in HD. So there's that much more of me to squeezably love on a beautiful day out here on the 18th of November with just 35 shopping days till Christmas. Boy, it's going to be here faster than you think. Anyway, as we see a market that's pretty much kind of just that stumbling up that we've talked about for the last few weeks. And that is just not a real opportunity to see any kind of significant pullback. When we actually look at the numbers, what do we have out here? S&P is up just a hair under 13 points. We've got 2 billion shares, so volume just a little ahead of yesterday, not significantly. 1 billion shares on the NASDAQ, and it's up, 36 points. So a little bit stronger than the rest. And this is the proverbial short squeeze into the end of the year, and you'll see patterns like this happen very often. What it does mean is, of course, as long as sellers won't sell, it's pretty hard to make a stock go down. The owners of stock won't sell. It's hard to make a stock go down. You'll always have a few people, but for the most part, you'll have people selling the losers in their portfolio so they don't have to pay taxes on them. And you will find them either trying to juice the winners out there and or see shorts as volume starts to decrease all the way into pretty much it goes dead about the 15th to 18th of December. Volume does not come back until the 3rd to the 5th of January. So that's a pretty tough time to be short. And there's an old saying that says, don't be short a quiet market. Well, that's what I've said. I don't like that we're going up here with increasingly lighter volume, but that is not uncommon in 2 times of the year, and that is the last few weeks of August as fund managers run off to the Hamptons for the last big weekend or two to spend time with their kids. And that also goes on into, of course, the time frame that is very late in the year, and that's the 15th through about the 5th of January, the 15th of December through the January 5th area. And it is a tough thing to think that you can bypass that seasonal bias. You really have to have something significant to pull it back. My guess is that we have basically a couple things. One, we have political instability at home, and we might see that later this week and give us a little volatility. My guess is that would be short-lived. The next thing after that would be horrible Black Friday numbers, or who knows exactly when the numbers actually come anymore now that everybody's opening up on Thanksgiving evening anyway. But somewhere in that time frame, we get some really horrible numbers from retail, but I just don't see it. I think that $20 a week that everybody is putting in their pocket from gasoline is probably going to find its way to at least a few more Christmas presents this fall. And maybe even some of the worst hit retailers will find a few people buying some clothes. It is going to be tough to be short out here, and unless it would take a major incident, I think, now to really start moving it. But we've got just a few more days of that window, probably into Friday. And if we don't see that, I'll probably take off any downside protection that I have. So we've got just a few more days for the possibility of it happening. But like I said, 35 shopping days till Christmas now, or 34. Actually, I think we're more than halfway done. So I'm going to call it 34 shopping days till Christmas. It is going to be somewhat problematic to see a pullback. Again, the volume was fairly decent in this last move up, and of course, no real high volume. But we've also been talking about that pattern. And that pattern is where you get a lot of stocks just hanging out at their highs. You don't want to be generally short a market like that because it's instead of blazing through, it's chewing through. Now, long term or medium term, probably not bullish, but really rather bearish, because what you have is shorts getting out of the market. Any pullback then won't have any natural buyers. We've been able to pretty much grab the market 3 times this year in the daily newsletter and catch all the 3 major moves down to some degree or another. Some of them actually huge. 2 of the 3 actually, I think, pretty huge. And that has made a lot more money than if we would have just stayed long over the year. But what this does set up is an incredibly brittle market starting next year. And I think that is the first opportunity for play for us to the downside. In the meantime, if you've listened to the show, I've said probably the same thing for the last 2 weeks. That is, we are looking for short squeezes in stocks if you're going to make any significant money. Are going to be a few buyouts that were kind of hard to figure out. Yes, maybe you were lucky enough to get one of those. I've never have been. But maybe you get the buyout, and that's good. But for the most part, we're going to hear a lot of PR, a lot of these stocks like Apple, an incessant drumbeat of we're going to the moon, it's going higher. And don't think for a minute this isn't orchestrated by all these trading houses and want to paint the tape going into the end of the year. I was actually, if anybody's listening, I'll try to find it during the break. But there's a great part, I think it's in Chapter 8 of Reminiscence of a Stock Operator, where Jesse Livermore says, I'm going to go and start doing big, long swing trades instead of just going after individual stocks. I'm going to wait until the market is lined up for what I want to do. And he figures everything out. He has it down to a T, and he starts shorting about 2 months before the beginning of the year. And basically right after the beginning of the year, the market finally cracks. There's a variety of reasons that are in that chapter. But he basically ended up shorting and being basically run out several times. And he gets to the point where he says, I have to wait for the inevitable advances and declines. But the problem was that I was using a telescope to look for it. And I need to wait until I see the whites of their eyes. I'm paraphrasing what he has in here. But I'll try to find that segment. If not, I'll try to find it tonight and play it tomorrow. But it's a very interesting part where somebody that's extremely good at knowing the conditions of the marketplace goes short way too early and into a season where the market is certainly weak, but it did not matter. You were going into the end of the year and no one was willing to sell. And that was problematic at best. Anyway, I digress. And, of course, we digress all the time. And there was a few things out here today that were of interest to me. One is the book that we talked about last week from, what's his name now? Tony Robbins. And it is out today, and I swung by the bookstore at lunch and took a quick look, and I'll probably get the e-version of it so I can keep it. I looked at it. I don't know if there's a whole lot in here we can use, but again, I didn't get to read the whole thing. I just went through a few chapters. But mostly what they're going to be pushing in that book over the next few weeks is basically, you can make a good living going out of Ray Dalio's model, which is supposed to give you an average of 13% returns over so many years. And it looks to me like Tony has got the problem with all people, and that is that he does not understand statistics. Probably not a bad way to think of the market, but probably a poor way to figure out a way to position your money. But I'll wait until some other people weigh in. What I thought was most interesting in my brief cursory run-through in that book was Ray Dalio's model. He's a big hotshot. If you don't know him, you can Google his name. It's Dalio. But he's got a lot of cash. But basically, he has had a bunch of people in there trying to program models for the market. And he's basically broken the model down to four things that move equity assets: inflation, deflation, rising economic growth, and declining economic growth. And their models are based on that. He has economic seasons in which they try to gauge higher than expected inflation, lower than expected inflation, higher than expected economic growth, and lower than expected economic growth. And that's pretty much it. So he's basically divided stocks into four categories that will do well in any one of these seasons. He does say that it's not like you go from spring to fall. He says, you can go direct from fall to spring or fall to summer, and it's not that part doesn't fall 1, 2, 3, 4. But kind of an interesting idea of a way to look at the market and segment, of course, the sectors that he wants you to invest in blindly one time a year. And if one is doing badly, the other one will do okay. That's kind of the theory on it. I looked through it fairly quickly, and I have a feeling that probably a little bit more thought needs to go into it. And I don't think Tony Robbins is an investor of that type. I have a feeling that he probably has somebody managing his money for a lot more than 0.5% more than the return on the S&P this year. But that's just a guess. Anyway, we'll talk more about it when I get to read the entire thing. But I thought it was kind of interesting. Models, of course, can be the downfall of a great many people, especially the longer you go out. One of my heroes in science that helped create the nuclear bomb called them a cancer in science, mostly because you can program to tell yourself anything you want. And there's models that basically predict all kinds of stuff. Unfortunately, there's always some kind of bias for the most part that is put in. And why science is not models, it is a prediction, and whether or not that prediction comes true. And that's probably sadly lacking from a lot of discourse, especially when it comes into political things that are being prognosticated. Now, we all know how hard the stock market is to predict, yet people want to predict things 100 years in the future. And I have a feeling that they will be sadly and incredibly wrong. Anyway, when we come back, we're going to get into a lot of high-tech stuff out here as the market's kind of going sideways. And yes, there is a hoverboard. 30 years after Back to the Future, there is a hoverboard. But it's not what you think. We'll be back in a minute.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
With the launch of Tiger TV, TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, David White, Larry Pesavento, Andy Hecht, Think or Swim, or Carol Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing. Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
You've always taken the long view when it comes to investing, but what if there's an opportunity right under your nose? What if you could be more responsive to market trends to seek to boost your portfolio performance right now while seeking to reduce your overall risk? At Direction Funds, we connect investors with alternative strategies that seek to maximize their returns. Smart investors deserve smart alternatives. Find yours at directionfunds.com. An investor should consider the investment objectives, risk charges, and expenses of Direction Funds carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Funds. To obtain a prospectus or summary prospectus, please contact the Direction Funds at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. Investing in index funds may be more volatile than investing in broadly diversified funds. Distributed by Rafferty Capital Markets, LLC.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. Dave takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
And anyway, I guess Andy Hecht has some more articles on Seeking Alpha. We were talking about some of his ideas, and I said, you know, that sounds very close to the 5 stages of grief that PhD, it was a guy or a gal did forever and a lifetime ago, it seems like. But the 5 stages of grief, and then he wrote an article about the 5 stages of grief in the commodities market. But interesting. I think he's got a couple articles out there. I'm sure he'll talk about them tonight. Anyway, we're talking about the hoverboard, and I had some people email me about it, so I thought I'd go ahead and talk about it on the show. It's not going to really be a practical hoverboard. This works by making magnets and focusing them like a lens, kind of like a laser, if you want to think of it that way. It has to be over a ferrous metal, one that has the ability to be magnetic. It actually induces a current which makes basically a reaction like a magnet in it. But it's kind of a proof of concept kind of thing. It's called the Hendo hoverboard, H-E-N-D-E-O. If you want to Google it, it's on Quickstarter. I guess some people just want it. It's probably going to be fairly expensive and not very practical. Of course, you've got to be over a big plate of steel. But it does offer some very, very interesting things, although it shows a great deal of, I'm going to even call this a pre-prototype. Sounds like a lawn blower going off. They've basically swirling some magnets around in there. So it's kind of loud. Eventually, they're going to try to make this thing a solid-state device where there wouldn't be any moving parts. But it does offer a lot of things, especially maglev trains that are self-contained, especially for people transportation. Right now, maglev trains are real big in Japan, some areas of Europe. But this kind of technology where you can actually focus magnetics is extremely important in two areas, train and transportation kind of stuff. The other one will be nuclear energy, where we can have safe, clean, and abundant energy for the foreseeable future, and I mean millions, maybe billions of years on this planet by using heavy hydrogen and or what they call heavy water to create all the energy we would ever need. But kind of interesting if you want to go Kickstarter and check it out. There's some videos on it. It is of things that this thing is actually going to be made into. Hoverboard is probably the least significant of all of them, but great demonstration of technology, and interesting that in, well, I guess it's going to be next year now. It's going to be 30 years since Back to the Future and the hoverboard. And interesting idea out here, but very good for nuclear energy in the near future. That's fusion, not fission. OPEC meeting. Andy's, of course, is going to be, I guess, in the 5 o'clock hour tonight and talking a lot. But to me, probably the biggest thing in the commodity space is going to be crude and what happens in the near future. The question is whether OPEC once again falls apart. Its meeting is on the 27th in Vienna, Austria. If they all start throwing stuff at each other at this meeting, we could very easily see a pullback like we saw in the 90s where gasoline was, what, $1.10 a gallon or something? I remember I was racing. I loved it. I was always afraid that the price would go up significantly. I'd owned a boat most of the 90s, was paying, I don't know, probably about probably $400 or $500 a time to fill up my boat. And that was at $1.50. So I was more than glad to see that gas prices low when I was traveling the country and doing a lot of motorcycle racing. But they kind of fell apart, and then they got it back together, and now it looks like they're kind of falling apart. And the question is just how bad some of these nations need it, especially Iran, some of these other ones, to keep the wheels greased, and some of them not, like the Saudis. And just how far it's going to go. But if it blows apart, we could see additional oil on this market. And again, about 30% of the market's correlated to energy. It's very interesting to see this market go to brand new highs with crude back down around 75 and weak today. And, of course, natural gas seeing a little bit of weakness out here today. That's interesting, too, especially with as cold as it is. But what do we have? Where's that? I'll have to look at it. I used to have it listed up here. Yeah, we'll look at it when we come back. Give me a call, 877-927-6648.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's Nadex.com. or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN, and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how EverBank can help keep your money thriving just the way you want. Is growing your money a priority? EverBank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? EverBank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. EverBank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. EverBank is a member FDIC and equal housing lender.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
In other news, before we get into the charts, the Mirai is a new car. It will go on sale next year in the U.S. About this time. It's already going to be for sale in Japan. It will be a fuel cell car for people that don't know what a fuel cell is. Basically, you push both oxygen and hydrogen through a high-pressure membrane and a catalyst, like gold, platinum, expensive ones, of course. Nothing cheap about this. And it generates electricity. And it's how we got to the moon. If you watched the Apollo 13 movie and watched it blow out the side of the Apollo 13 capsule, that was a big pressurized vessel of liquid oxygen. This is just going to be pressurized, not going to be liquid oxygen and hydrogen, along with water. Fuel cells, kind of a very interesting technology, and kind of interesting to see that Toyota is going this route instead of the battery route. I suspect that means that they don't think that batteries will live up to the promise. I've always said that the problem with batteries is, you're going to get about 70% capacity in about 4 years for batteries. And in about 5 years, you've got, 65%. Pretty soon, this car that had 300 miles is now getting you 150 miles. That shouldn't be a problem with the fuel cell car. It just the fuel cell will just generate less power at one particular time. But it is going to be interesting. 350-mile range, about $30, they say, to fill it up. But the downside is, ideally, you would like to have some battery-like device that was perfect. Unfortunately, batteries are enormously expensive. This car is going to be about $30,000 less than the Teslas with good range. It takes about 3 to 5 minutes to fill it up. You would put water, and the water, if anybody's ever been scuba diving and you watch them charge the compressed air cylinders, you'll notice that they put them in water to keep them cool while they're compressing them. Basically, my understanding is that's why this thing has water. It'll have some kind of antifreeze bath around the high-pressure tanks in it. But not a bad deal. 350-mile range, all electric, just generates power that goes to that. The one real big downside to hydrogen is that it's a slippery little gas, and even the best you can do will mean that you'll have about 1.5% loss per month. So not as bad as batteries. If you came and charged your Tesla and parked it at the airport and came back 30 days, you'd be lucky to have probably about 50% left. So in the scheme of things, not a bad deal. But if you left it around long enough, it would have a problem starting. And just because of the lack of hydrogen as it escapes. Oxygen, not that bad. I think oxygen's like 0.25%. They're small little atoms, and they can leak out of the best sealed devices. But certainly looks like Toyota's commitment to this is going on. The car looks kind of interesting in a Prius kind of way, and it looks like they may even be discontinuing the Prius in the not too distant future. On launch, there will be about 30 places in and around L.A. and San Francisco to fuel it. One of the things I like about it is that it doesn't really take much to make hydrogen and oxygen. It is, think about a spark plug in water, and that's about it. If you can make a little spark, you can separate the oxygen and the hydrogen, and that's pretty much all it takes. So you might see one day the equivalent of a compressor out behind someone's house that just does this so that people can fuel up at home if electricity is cheap enough, again with the aforementioned fusion power. So interesting technology coming along. Tesla, I noticed, was up. Let's get a quick quote on that here real quick. Earlier, this is a year away, even from the beginning. It's up almost 2% on the market. But again, Tesla was, I had 40% short interest. I don't know what it is today, but I'm sure it's still astronomical. Stock probably truly worth about $40. But stocks like this can remain irrational longer than you can remain solvent. I would love to see this thing go back up and squeeze all the shorts out. And at that point, you might get the kind of huge downside that I think in this stock. But I think it's going to have these people get off the back of it before it does go down. Shorts are always, of course, the weakest hand of in any market. And they are always the first, about 10 times more likely to make a trade than someone that is long. And that means that they take their cash rather quickly. And unfortunately, those are the people that are going to be on your side in any down move in Tesla. Also always problematic. But I digress. Let's get into some other things that are moving out here. That's the end of that. There were a few other things that I thought were interesting. AMBA. Take a quick look at that. GoPro has gone ballistic, as one way of describing it. And Umbrella, of course, makes the chips for this. They are up on some decent volume today. You need 4.5 million shares, though, to really break through what we've seen before. and you had 3 million shares on November the 3rd, and you had 2 million shares on the 10th. Those were the big days. Now, today you've got 2.3 million shares, 2.4 million shares, so I don't think you're going to get that either. But GoPro, PRO, is even issuing more shares than they had before, but this one's so ridiculously short that it even can't go down. My guess is that we're probably going to see this thing. Well, you've got IPO lockup, which is on the 23rd of December. So this thing's it's gonna be darn impossible to break that before Christmas. The PR engine on this is something that just won't quit. If you know anything about the GoPro founder, his dad is a market guru and in the business, and he knows all the tricks. So I'm not really surprised that we've seen what we've had. But even the CEO is going to be bailing out of huge amounts of shares at this higher price before the IPO lockup. And, of course, he gave some to his own foundation, and he's done everything else. But this may be the Qualcomm / what was it, the iOmega of our generation, of this market generation. I know that's only 15 years ago, but I think it's almost like dog years, I think, in finance. They go a lot along faster than the actual years. But that's it. Now, we got all kinds of questions flying at me here in the den. But GoPro, kind of interesting. But again, we're going to need some more shares in this to come out before this thing cracks. And last I checked, they were still asking for an enormous premium to get shares to short on this, which I think is a fool's errand. I never pay up for shares in a stock to short it, but that would be it. Does GoPro device give off any radiation? Not that I know of. I mean, it's going to give off a small amount of radiation, as anything that we have does, but nothing that would be interesting. Lockup expires the 23rd I can't figure out this question. Is it lockup on GoPro or lockup on Baba? On Alibaba, lockup is in March of next year. Yeah, so we don't have, BABA. It's in March. I think it's March 23rd, something like that. It's a ways away, March 15th. So you've got 3 months before Alibaba has any issues with liquidity out there. GoPro, a much bigger deal out here, mostly because, I don't know, I think a lot of people are buying a pig in a poke in this one. The ability to continue to get hardware margins like Apple is extremely rare. So your chances of actually finding something like this at the valuations it has now and keeping those valuations is small. Let me put it this way. The upside is incredibly narrow and the downside is incredibly vast, but it won't matter until shares become available and probably after next year when the whole idea of the big lie of this being a media company kind of fades away. But it's no Facebook. And it's making very good margins now on hardware. Those margins always seem to fade away, especially since they don't really have anything in particular other than the fact of a hard head start in front of companies like Samsung and Sanyo and the rest, which I think are going to be all over this market next year. What else did we have? Baba, Breaking Bad, Baba questions. Well, I guess I better pop up BABA. It just kind of made it high out here. I don't think there's anything significant happening in Alibaba yet. I mean, it is pulling back, but that's not going to be uncommon for the run this thing had out of its IPO price. But I don't think there's anything other than happening than it way overshot its particular value, but shares will be short for a while in it. So I'm not going to be touching that one either. Why can't another? I don't know of any patents that they have that would really matter. Somebody asked a question in the den on whether or not GoPro could get around it. There's nothing significantly different that those guys are doing than other people haven't already done. If I was another company like Sanyo or Samsung, I'd just go ahead and make it and say I'd see you in court. my guess is that those are pretty poor. Mobileye, another one. Of course, everybody thinking that they are the future out here. Let's take a quick look at that one. Going sideways. Looks to me like someone's trying to accumulate this thing at about $47, and I'll take a look at the short interest during the break. But my guess is this thing is probably, this looks like somebody's just under the bid. I'd be watching this for a huge spike higher in MBLY. Let me take a quick look at the headlines out here and see what's going on. Bye. To me, I don't want to see a stock, a big stock like Mobileye that's in the zeitgeist of the fast money crowd going sideways like this, because almost always it's a break to the upside. I've got a couple of stocks that I'm playing that are like this, and I'll be taking a look at that. In fact, let's take a look right now on that one. MBLY. Okay, short interest. Let's take a look at this guy. 4 days to cover, so not that bad a short interest. Let's take a look. MBLY. Let's take a look when the lockup is out on this. Our company. There we go. See if I can find the lockup date for MBLY lockup date. Okay, here's the IPO information. See, lockup period days, 180 days. Lockup on the 28th of January. So I would say that you'd want to watch this one for a huge short squeeze. My guess is that a lot of people will probably try to short this thing. And I'm thinking we get new numbers on Friday for short interest, so I wouldn't probably be short it till then. But if this thing has gained a great deal more than about 4 days to cover on average volume, I would be watching this for a spike back up going into the end of the year. I like this pattern out here where you have very narrow trading ranges out here and a market that is going higher to see this. And, of course, they've got till the end of January for lockup on this one. And it looks to me like someone's out here probably picking up as many shares as they can at that $47 level, and are going to pop this thing. So I would watch this. And, again, it's going to be one of these things that could go sideways for the next 14 days. And then you get a pop of 10 points back up to the highs up here at $60 or $15. That would be a pop of, what, $13? But you can do that. But watch these stocks that are going sideways like this or that hang out at highs right now, because they are probably going to break higher by the end of the year. And I don't think you're going to be writing home about how you're retiring on any of these, but if you want to make a few shekels before the end of the year, not a bad-looking pattern. Why can't another take up? Why no competition? Just no one wanted to get into it. There is no big, huge barrier to entry, and I think that's on GoPro we're talking about, and I think that's why they were talking about themselves being a media company. They've just done a much better design job in making and designing cameras for highly durable operation. So I think other people will just duplicate what they've done in the near future. Much better ecosystem, but I think the big thing will be people coming in and offering a GoPro for about half of what GoPro charges for it, and that will be the end of GoPro.
You know what's cool? Taking something that's good for you. Something specifically formulated to help with weight loss, better sleep, stress reduction, and the need to detox.
Nico, our hunter and gatherer ancestors found all their nutritional requirements for health in their wild environment. But today, our food sources no longer contain the vitamins, minerals, and nutrients our bodies need to stay healthy and strong.
That's why we need Primal Edge Daily Nutrition. It includes a special blend of ionic, soil-based vitamins, minerals, fatty, and amino acids in an easy-to-use liquid form.
Primal Edge is powered by highly concentrated fulvic and humic acids, nature's preferred delivery system. They have been called miracle molecules because, like sunlight, air, and water, Life cannot exist without them.
That's right, Paige. They ensure we receive all the nutrition we need to be healthy and thrive. We take it every morning.
Primal Edge, formulated and approved by Nico and Paige of Living a Primal Lifestyle. Buy it today for just $89. Click on the Primal Edge banner on the front page of TFNN.com.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today. When you first learn something in life, you have the most questions as you begin to apply that knowledge, which is why Steve Rhodes came up with the idea for his 7-week trading program. It all begins Saturday, November 22nd, when Steve Rhodes will host a live 3-hour morning workshop where he'll teach his attendees the precise methodology he uses when placing trades. You'll then receive 6 weekly updates each Monday morning discussing the possible alerts currently setting up in the market. Steve will then bring everyone back together for a final 3-hour live workshop Friday, January 9th, where he'll discuss the methodology that went into each of the 6 weekly updates, making sure that you're confident in applying what you've learned so that you can begin navigating the market on your own. You can sign up right now for this entire 7-week trading program with Steve Rhodes for a one-time payment of only $395. If you're a Mastering Probability subscriber, then you can save an extra $100 off that price. For all the details, visit the front page of TFNN.com right now.
Catch Tom O'Brien, professional trader and educator, founder of TFNN. Also, a special guest on CNBC. Tom will bisect and dissect the markets. The Tom O'Brien Show, next on TFNN.
And we've been talking about some of these stocks that have come up and tested on light volume. Best Buy. One of these stocks. Looking for this one once again to probably sell off just a day or two after Christmas and the actual real numbers come out. But probably not a better pattern. But since we brought this up yesterday, I thought I'd do a little follow-up on it. But it is interesting nonetheless. But, of course, the huge gap down, that gap happened on, I think, on the 15th of January when they fessed up that there were no profits in what they were doing, basically going after Amazon. I'm thinking that they've done a much better job of getting a lot of cash. Now, one of the downside is most of that cash came from selling iPhones over the last few months, and why the stock's kind of hanging up here at the highs. As soon as everybody that wants to buy an iPhone has bought an iPhone, I suspect that these guys are going to be in somewhat a little bit of trouble again. Volume on the new ultra-high definition televisions is starting to look fairly good. Netflix is just the last couple of days, rolling out their ultra-high definition feeds, but I haven't heard anything about whether or not the cable systems can actually handle it or not. So we'll be looking at that. But pretty good indication of exactly what you're looking for in a short position. I just think seasonally it is going to be tough to get anything to go up against that. What else do we have out here that was very interesting? Also looking at stocks that have gone ballistic. I want to be looking very closely at Visa. This is a very scary pattern out here, and is pretty much the definitive guide to something that Joe DiNapoli created called a double repo pattern. That is 10 to 15 days above the 3x3 displaced moving average. You can use a 9-day moving average. It's going to be pretty close. A few days closing below it, a few days closing back above it, and then the next close after that is normally the huge move back down. In this case, it would probably be back down to 220, and that's pretty much in that gap. And a lot of times we'll go back all the way to the beginning, which is 195.19. I don't know of anything that would actually cause that. Business is pretty good in Visa, but if we see probably a big change in the market, I'll be watching this pattern to see whether or not it does confirm itself. But what we don't want to do is see this thing go back above 252.43. But if it just goes above that line for a little while, a couple of days, and then closes back below it, you could see this thing drift back into the 220. It may take until after Christmas for that to happen, but certainly it looks like some of these things are kind of tapping out. EMC is kind of another one that looked fairly interesting. And I wanted to look at this one yet again and see how it was doing. Of course, it needed 47 million shares from the September 22nd high, and $30.18. It's plainly gone above it today, but basically you got about 9 million shares. So a lot of these stocks getting into some rarefied air. Do I have the, where's my test for today? Huh. Yeah, I don't know. Oh, that's right. There's no test yet today. That is correct. That is for yesterday, for the last day I had a scan. Service Corporation International, SCI, is another one of these. Oh, we're already out of time, folks. Make sure to hang on for the Tom O'Brien Show coming. Hope you all are enjoying me in ultra high definition. See you tomorrow, same bat channel, same bat time. So when you can, not when you have to.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
You're watching Tiger TV.